whenever I bet, I could change the odds for every bookmaker in the country.
There's like $1 million riding on that game.
Oh, there's like a whole lot more than that.
Now there's a new game in town, one that's regulated not as gaming, but as a market, something that moved into the spotlight by beating the polls in predicting the results of the most recent presidential election.
I believe the greatest political movement of all time. There's never been anything like this in this country and maybe beyond.
These prediction markets are based on event contracts traded on an open exchange. And they told us to expect a Trump win weeks before the election. So, what is an event contract?
Event contracts are basically yes or no questions about upcoming events. And people form various opinions and expectations about them. And we ask them, what do they think the probability is that the event is going to happen or it is not going to happen? And we ask that in the way where we say that you can buy a yes or a no answer, and if you are correct, we will pay you $1. So therefore, the appropriate price for buying a yes or a no is the probability that the outcome will be the yes or the no.
Thomas Peterffy is the founder of Interactive Brokers, a brokerage firm that launched its own prediction website last year called ForecastX.
ForecastX currently deals with climate questions, economic indicators, political questions. In the future, it will deal with questions having to do with the economy, having to do with cultural developments, having to do with demographic questions, and basically the large questions that people are faced with in their lives.
I think our goal with prediction markets is really to allow every person that has an opinion on something to find that market and that big event that they care about to be able to trade on.
ForecastX isn't the first or the only prediction market in the United States. Founded in 2018 and launched in 2021, Kalshi is the first CFTC-regulated exchange, and it's taken the market by storm. Kalshi's app has been downloaded about 2 million times, and it's seen nearly $2 billion in contracts. Luana Lopes Lara is the company's co-founder and COO.
While we were in MIT, one thing we realized is that most trading happens when you have an opinion about what's going to happen in the future and you find a way to put that in the market. So you think this country is going to go into a recession, or you think this person is going to win an election, or Brexit's going to happen, and you find a way to express that view in the market to hedge some risk that you have, or also to get exposure to something. And what we realized was there should be a better way to do it. And for us, it was, why is there no direct exchange that you can just trade directly on what you think is going to happen?
Kalshi saw around $500 million put down on the 2024 election, but its value might not be in the money placed, but in what it told us. Kalshi's prediction market had Trump comfortably ahead of Kamala Harris in the lead up to the election, even as polls saw Harris narrowly ahead.
Prediction markets, and Kalshi in particular, got a lot of attention because of the most recent presidential election, in which the polls sort of showed it was really close, and you said not so much. Why was there such difficulty in getting approval for that? Because you had to fight the CFTC, as I recall.
After we launched in 2021, a couple months after, we realized that we really needed to add presidential elections. It's a big event that has massive impact throughout the world and the country. As you can see what's happening now with tariffs and everything, they're so tied to this event. And we started engaging with the CFTC. They had a lot of concerns that it would destroy democracy, that people would change their votes based on who they would vote for, and things like that, or the perception that people would change their votes based on who would win. They thought it was too close to gambling and all of those things. We engaged with them for over a year, and it got to a point that we saw the only way to go forward is if we sue them, because they're just acting unlawfully. We ended up winning on the stay of the appeal to be able to list it. And I think that all of their concerns were also, after the election, proved to not be true, right? Like, we know now that the election was not manipulated by election markets, even though billions of dollars were traded. We know that it didn't destroy democracy. We know all of these things that we were saying were true are actually true. And it's great to be kind of vindicated that this was actually a great thing to actually enhance democracy because polls were so bad. During the election season, that was kind of the narrative that we were pushing.
Was the presidential election the largest single event in your volume so far?
Yeah. Yes.
How big was it?
The actual who's going to win, I think it was like 500 million or 600 million on just that one. But we had actually markets on who's going to win Pennsylvania, for example, and the margin of victory and a lot of other, I guess, derivatives of that main event that took the pie to like over $1 billion.
For some of us who are not as familiar with prediction markets, you said earlier, it's not betting. Why is it not? Because it sort of looks and talks and walks a little bit like betting. What's the difference between a prediction market, taking an event contract, and betting?
The easiest way, I think, to explain this is we are pretty much like the New York Stock Exchange or the Chicago Mercantile Exchange in terms of structure. We are a trade matching engine, right? So you can come and say, I want to take a position on this. Someone else says, I want to take a position on this. I think a big difference there is like we're an exchange, we're not a house. We don't make money if people lose. Let's say you think hiking rates will hurt your student loans, you can actually buy a contract that says if they hike, we'll pay. You can use that to offset, basically hedge. And I think that that's the underlying difference is that we're an exchange. We don't offer margin. We actually pay interest on all your positions and your cash in the platform. And we offer contracts that we think are even safer because you can have more information about a lot of the markets that we have than you have about some obscure financials of some company that you don't know about. We are fully regulated federally as an exchange and have all the supports there. But obviously people do, as in the stock market. Some people gamble, some people hedge, some people short sell. There's people do crazy things, and I think they'll do the same.
These platforms say, well, this isn't betting. This isn't sports betting, for example, when you can buy a contract on whether the Chiefs will beat the Eagles, betting against the house, against the casino, against the bookie, whatever. Here you're trading with other people. That seems to me to be a distinction that's somewhat without a difference.
Tim Massad is the former Commodity Futures Trading Commission chairman, an independent federal agency established in 1974 to regulate the United States derivatives markets. The CFTC now oversees online forecasting, and Massad says he's not against prediction markets, but has his doubts about how best to regulate them.
There wasn't much activity here. When I was chair, we had a proposal for a political contract on elections, and we limited that to a university setting where the volume was really very limited. But over the last few years, we've seen firms start up that want to do a lot more of these, and that's made the regulatory challenge really big. Congress tried to give the CFTC some tools to limit the range of these things back in 2010 when the Dodd-Frank law was passed. The Congress said the CFTC can not certify something if it determines that the contract is not in the public interest and it falls into one of basically 5 categories. It pertains to war, terrorism, assassination, an activity that's unlawful, or gaming. But those are the only categories. And it said gaming, not gambling. The CFTC put out a rule proposal last year that basically tried to take an expansive view of this as to what gaming was and to how to define public interest. If we want to allow this, that's fine, but I wouldn't make the CFTC the regulator of it. The CFTC is a small agency. It's got other things to do that I think are more central to its mission.
So why is it the CFTC's job to regulate event contracts?
It's a financial contract, and it's not married to the performance of any specific company. It is not a security. It is a commodity. The distinction between commodity or a security is kind of vague, and it's more for lawyers than people like me to say which is a commodity and which is a security.
Whoever regulates them, it certainly looks like prediction markets are here to stay. Looking to build on its success in the presidential election, Kalshi this year announced a deal with Robinhood to let people trade on contracts for the Super Bowl from their brokerage account, although the CFTC once again stepped in to put the deal on hold.
Super Bowl obviously is a very big event, and it's in one of the events on which you took contracts. You also had a special relationship with Robinhood, but at the same time, the regulators weren't done with you yet. What is the issue there? Do you know why is the CFTC particularly concerned about that?
The same way that we opened a very big pie, in our opinion, with elections, sports are another big one, and I think we expected a bit of a scrutiny. We think they're completely legal markets that should be offered in prediction markets and CFTC regulated exchanges as well. But I think there's just more engagement on that front from the regulators that we were somewhat expecting. In terms of the Robinhood specifics, we're very excited to expand into sports. We think that this year is going to be very, very big for us growing there. And we're excited to connect with brokers and have them with sports and mix everything together.
Exchange trading in event contracts is here and it's regulated. But ultimately, what does it do for the markets and to the markets? Does it provide useful information to investors, or is it more a form of recreation?
You know, there's a view among economists that, or at least some economists, that, well, these are useful. They generate information, and they're more useful than polls. You can certainly argue they generate important information. A lot of, some economists at least, have said, look, these are better than polls in many cases. So I don't quarrel with that. I think they can generate interesting information. And so from that standpoint, you could say, sure, it's a public good.
We need a mechanism for people to express their views so that legislators can come out with appropriate legislation to basically channel the future for the people. And the way to do that, I think, is one way to do that, and probably the most effective way to do that, is to continuously get feedback from the population as to what legislators are trying to do, whether that is going to get the people where they want to go. So they can propose, look at, for example, the national debt. So, you know, these questions, I think, are going to be very important. And therefore, event contracts trading is going to become very important.
And perhaps most important, how big could this prediction market thing get?
How large a portion of your business is the event contract part?
At this point, it's extremely tiny.
Do you expect it to grow?
I expect it to become a huge market.
I think the prediction markets are the best way to get unbiased information about the future over a lot of different events and to get exposure directly to them. If you want to get information about the tariffs, if you want to get information about how inflation is going to be at the end of the year, the best and purest way to learn this is looking at a prediction market. We actually, our Fed markets, even though we're a lot smaller in dollar volume, outperformed CME Fed Fund Futures forecast of the Fed rates. It's just a significantly better way to get information about the future.